Hi, my name is Alex Carlucci with GustonShow.com. I want to talk about paying off your mortgage early and how smart it is to do. And let me tell you how to do it to make sure that you can do it, because most people don't do it. So if I close a loan, I'll say, hey, you do a 30-year mortgage or you do a 15-year mortgage. If you do a 15-year mortgage on a $300,000 loan, you might save $200,000 in interest over the life of the loan. That's a big chunk of change. So if you can afford the 15-year payment, I recommend it all day long. But if you're a good money manager and you are worried about that 15-year payment, it's a little bit pressure on you, you can do the 30-year payment and you could make 3 extra payments a year. You can create your own 15-year mortgage. You can make an extra couple $100 payment a month. Whatever the math is, you can create that. And as long as you stick to that budget and you make those extra payments, you will turn that 30-year into a 15-year. And the good thing about doing the 30-year versus the 15-year in that situation, if you do run into a tough time, if there is a rough patch, then you get some relief. You don't have to refinance and stretch it out to a 30-year and, oh, do I qualify? So you'll have the option to relieve yourself. But I've noticed people don't do it. They can't budget themselves to do it. They make the minimum payment they possibly can. It's a tough racket. It's tough to do it. But if you want to just be smart, make 1 extra mortgage payment per year, you'll knock 5 years off your loan and save yourself $80,000 over the life. You got to at least try to do that. Throw the money out. When you have a chunk of change, throw it at your house. You're saving yourself tons of money over the long haul. The way you pay interest on these loans is brutally, it's compounded so brutally that you're paying so much more for that house, you don't even realize it. If you throw money at it, extra money, when you got it, you're going to save yourself a lot of money. These loans don't come with prepayment penalties, so there's no penalty for doing it. Now, in the old days, when I mean the old days, like a couple years ago, the 15-year used to be a better rate than the 30 years. So you could argue, the 15 years got a better rate. That's why I'm doing the 15 versus the 30. But right now, the yield curve's flat. The 15 and 30 year are pretty close, maybe a quarter difference. So that little quarter difference isn't really worth it when you might need that relief program. But if you know you are only going to pay the minimum payment, then you better take the 15-year. But if you can shorten that term, you're going to save tons of interest. That's the benefit of paying your mortgage off early. Give me a call at 630-915-7550.